Hey everybody, I wanted to walk you through a potential day trade with a couple different scenarios here using the chart for Light in the Box. Please, by the way, don't buy this stock just because you see this video. By the time you're watching this video, all this stuff that we're talking about on this potential day trade no longer applies. It's 1:30, it's Thursday, April 15th. Now, usually I say let's not buy a stock right at the open. Right? Usually what we want to see is some sort of consolidation, or there's going to be so many buyers, there's going to be so many sellers, there's going to be so much activity happening right at 9:30 in the morning that you don't want to be on the wrong side of some spur of the moment trade. I like to wait for confirmation of a trade or a trend. However, what we see with this one are two breakouts. Look, one here and one here on the Bollinger Bands. Two breakouts to the upside right at the open. That's pretty strong. Plus we have huge volume. So let's say we get in on this trade at around 279, right? We buy 1,000 shares. What we're looking for is this stock to get into oversold territory, because this is going to be a pretty quick trade, not a scalp. It's not going to be in and out in a couple of minutes. It's maybe an hour and a half is what we're looking for. A very quick rally up. We're going to ride a very quick trend. Maybe it takes about an hour, and we're going to lock in our profits pretty quick. So we're not looking to make $10,000 on a trade. We're not looking to make tons of money. We're just in and out within the span of about an hour. So the first thing we're going to be thinking about is if it gets into overbought territory at any point, that's when we're going to take our money and walk away. Doesn't mean that we might not be able to get back into the trade a little bit later on. We're going to be looking for a couple things. So one thing we're going to be looking for is if the stock starts to sell off, we're going to use this 20-day moving average as a line of support. What we hope happens is every time it hits this 20-day moving average, it bounces off of it, but it doesn't cross below. Crossing below tells us that it has potential more downside, and if it crosses this support line here, that's even more concerning because it says that there's trouble. It could break out and go even lower. So let's say we get into the stock, and for whatever reason, we take our 3% gain. That's about 3%, right? 280 to 289 is about 3%. It's a very quick $90 if you had 1,000 shares. If you had 2,000 shares, it's $180. You've got a couple options here. One is to have a technical analysis strategy. When it gives me a signal, right, it's overbought, that's when I'm out. The other is to have a financial signal, right, a monetary amount, a percentage amount. If we're making a quick trade, we're going to be in and out. We're not expecting to make 30, 40%. We're expecting to make under 10%, maybe even under 5%. It's a quick trade. That's one option. One option is to say, I hit my goal, right? So if you had 2,000 shares and it goes up 9 cents, it's about $180. I always say round up. Don't be literal, because if you're literal, you're almost never going to hit your goal. So 180, close enough to 200, I'm out. So this is one potential selling point. Another potential option that you have is to say, look, as long as it's staying in the positive side of these Bollinger Bands, I'm not going to exit this trade. I'm not even going to exit when I'm at break even at 280. I'm going to give myself 3 up to 5, maybe even 7% in loss. Gives you some room because stocks need to pull back before going higher. So if we exited here, great. If we didn't, what we're waiting for is to see what's going to happen with this 20-day moving average. When it crosses the 20-day moving average, it's not necessarily like you have to sell. It just means you should start paying attention because it's indicating that there is potential downside. Now, when you look at these Bollinger Bands, they're very wide apart, which on the uptrend is great. But when it peaks like it does here, it's saying that there's potential. Look at this downside potential. It could potentially get all the way down to 270. That would be obviously not great. What we're hoping for, though, as it starts to push back down here is one of two things, or actually one of three things. Well, no, one of two things, because it's what we're hoping for. The first thing we're hoping for is it bounces off the 20-day moving average and then goes back up. The second thing we're hoping for is that it consolidates on the side of positive territory, right? It starts to consolidate, but staying in positive territory. What we don't want to see happen is it crosses below, because like I said, potential is that there's more downside. However, this does look promising, right? We don't want to see a breakout to the downside. We want to see consolidation. And we would ideally like to see it in positive territory, but even if we're seeing it on the other side of the Bollinger Bands, it still is consolidation. So that's a promising sign. It's saying there's not a lot of selling. There's not a lot of selling pressure. There's not a lot of buying pressure either. But it's like a little battle between the bulls and the bears. And there's not enough pressure to buy to push it higher, but there's also not enough pressure to sell to push it lower. So we're happy to see consolidation. Now, if you wanted to, you could right-click on the chart, add drawing, and drop a little support line right here. And this is what we're going to start paying attention to. So at a certain point, if you hadn't sold here, when it crosses this 20-day, that's when you start paying attention. That's when you are glued to the screen, as we are. It is Thursday, April 15th, 1:35 right now, and I'm just watching. I'm literally just sitting here watching and waiting. I'm waiting for a couple things. One, I'm waiting for the Bollinger Bands to also consolidate, to squeeze together, because a squeeze is an indicator that there could be a breakout. The breakout could be to the upside, which would be great, or to the downside, which would be bad, because it would be breaking support and it would be showing us that there's potential downside all the way to, probably around 270, maybe. That would not be great. So literally, we're just sitting and we're waiting and we're waiting and we're watching for something to happen. Ideally, of course, in this hypothetical, we're in the trade at around 280. So what we would like to see is a surge in volume, right? Because this is where we bought it if we were day trading. And if we didn't get out here, we're waiting to see if we should get out at any point. When we break this support line and push lower, we're going to really be focusing on what happens. Because look at this, we're in the middle of the relative strength index. So it's essentially saying we've got a lot of downside potential, This stock could get into the 260s, and we have 1,000 shares. We're sitting on $200 loss. That's not great. We wouldn't obviously like that. So it literally is just a waiting game. And people ask, like, is it boring being a trader? Is it boring? Are you bored? Yeah, sometimes this is boring. Sometimes it's just wait and see. Now, of course, if you had somewhere to go or you had something to do, you could right-click and you could hit Create Alert with Drawing and tell me, hey, tell me when it crosses below. Tell me when it crosses below this support line. But since I'm sitting here and I'm watching, I'm going to not have that because I'm sitting here. I'm waiting and I'm watching. And this happens to be, in this hypothetical, the only stock that I'm in today. So I literally am just going to sit here and I'm going to wait and I'm going to watch and I'm going to hope something happens. Now, a couple of things. One, it's possible, it's entirely possible that this stock in our 1-day, 5-minute chart will literally just trade sideways until close at 4 o'clock. It's 1:30 now, so we've got a couple hours till the market closes. It's entirely possible that it just trades sideways, and that's going to be boring. And you're probably going to be on your phone watching TikToks. However, if it breaks, great. Now, the other thing you can do, of course, is you can draw a, you can do another price level, drop it a little higher here, because this is the trading range, and you can do Create Alert with Drawing and tell me when it crosses above, right? So now you can go and you can be looking at your phone and you can go into the kitchen and you can get a snack and whatever. And if it is, and you can, by the way, you can have multiple alerts, right? Just to show you, you can have multiple alerts set. Now we've got our alerts. So you don't technically have to be paying laser focused attention. You can be in the kitchen, you can be playing video games, you can play Candy Crush or whatever people play on their phones nowadays. You can do anything because your alerts are set. And your phone, if you have Thinkorswim by Ameritrade, which is what this is, and you have Thinkorswim on your phone, it will send a message, buzz through the app. It's hit a support. It's broken support. Oh no, it's going down. Now you got to pay attention and decide whether you should sell. Or conversely, it breaks resistance and it pushes higher. That would be great. That's what we're hoping for in this potential hypothetical trade, is that it breaks this resistance line. In other words, it's resisting going higher, breaks the resistance and rallies. Where could it go? Who knows? Maybe it gets back up to 289. Maybe it keeps running. But look at the potential upside on the relative strength. Also, pretty good potential upside here. We could push into the 290s, which would be fantastic if we bought at 280 and it pushes to 290, even $3. That would be great. So we've got our options here. This is just a day trading scenario here. You've got your one option here. Now, let's say hypothetically you bought it at 280, sold at 289. You had 2,000 shares. You made 180 bucks within an hour and a half or less on the day. It doesn't mean that you have to be done with this stock. You could potentially get back in, right? If it breaks this resistance line again. So you have options as a day trader to make multiple trades in a day. Some day traders like to say, no, you made your trade, you made your money, don't be greedy. You hit your goal. Like, look, if you were working at Starbucks or CVS or somewhere where you're making minimum wage, and you're making $80 a day on minimum wage, you've made 2 days worth of income. Are you sure you want to jeopardize that? The whole point of being a trader is that you get to work from home and be your own boss and not have to go out there and work a job. The goal isn't to become a millionaire. That would be great, but that's not realistic. The goal is to not have to go out there and work a 9 to 5 or a retail job. So if you're making 80 bucks a day and you've made 180 or 190 right now on this trade, that's pretty great. Are you sure you want to be greedy and jeopardize it? That's the one option. One option, you might say, you know what? I hit my goal. I made my money. I'm done for the day. The other option would be to say, I'm going to wait and see if there's an opportunity for me to get back in and make another trade. If you do that, I would say potentially you want to think about breaking even. Right? If it breaks and you don't sell and you don't have another trade and it starts to reverse course, get out where you got in so you don't end up eating into your $180 gains, right? Because if you take a $50 loss on the second trade or a $100 loss, then you've really only made 80 bucks on the day. You've erased the majority of your gains. You don't want to do that. So it really is a personal choice. It really is up to you. And then literally we're just going to wait and see. And since it is 1:41 in the afternoon, I'm not going to keep recording, but maybe I'll come back and I'll do an update, follow-up part 2 video to this, just to show you what potentially has happened. So if you found this video helpful, please hit the like, please hit the subscribe. Thanks for watching, and have a good day.